right, guys, Vinay here with Remax Realtor on TorontoRealEstateGenius.com. Today, I am here with my good friend, Adam Niman from Niman Financial. Thank you so much for joining me today and taking time out of your busy day to be here with me, Adam. I
No
really
worries, man.
appreciate it.
Happy
I
to
wanted to have
always
you
happy to
on.
chat business.
Likewise, we were talking around the holidays. We were catching up, and I said to you, it would be such a great idea to have you on because you have such a wealth of knowledge to offer people, and I just thought, I'd really want to share this kind of with my tribe and help people get a good grasp of insurance, specifically life insurance, because it's something that everybody should consider in their life and especially when they're buying a home. I think it kind of correlates and it goes hand in hand with the purchase of a home. So I really wanted to have you on here to kind of share your expertise and I guess tell us a little bit about your business as well. So why don't you start by telling us a little bit about yourself and what you do and how long you've been doing it for?
Yeah, sounds good. So I've been life insurance broker. I've been selling life insurance for the better part of 10 years.
Okay.
And I just advertise for myself. I don't have a team of brokers underneath me. As I mentioned to you before, any leads or any deals that come my way, I deal with personally and internally between myself and my brother. And we keep a pretty lean, pretty simple shop offering, really basic, I'd say low-level financial advice, just because I believe that that's generally the most important. I think people get too caught up with, long-term plans and long-term thinking, when the vast majority of the time people are better off making good day-to-day financial decisions. And if you
Yeah.
can make a good decision every day, the long run, in my opinion, pretty much will take care of itself.
Yeah, yeah. And I think, keeping it simple for the average person, just keeping it simple, I think is a huge, huge thing. A lot of people try to get invested in all these different things, and it's like stick with what you kind of know and kind of go from there, right? And
Yeah.
do what you do
And
best.
right. And I think the big issue with life insurance is a lot of the time, I don't know about a lot of the time, but with my experiences and people that I've spoken to who purchase from me, um, they usually know what they want and just want something basic. And sometimes they get led down a path of complicated products that
Yeah,
blur the lines between, if I die, I just want my wife or my spouse or my husband to have some money, with like investments and financial planning and different sorts of securities. So the intent is there, but too often the person that they're dealing with does so much that it becomes a very complicated practice, rather than being like, I just bought a house, I just want some insurance, and we'll deal with everything next. Which kind of leads into the first thing you mentioned. So you want me to cover kind of a mortgage insurance first, right?
yeah. So I guess the first question I have for you is like, what's the difference between mortgage insurance and life insurance in kind of a nutshell? And when you get a mortgage, the lenders try to entice you to get mortgage insurance. So how does that differ from, let's say, life insurance?
I see. So they're both basically the same thing. The difference is how you're paid. With mortgage insurance, the bank would just wipe the balance of the mortgage and you're left with a house free and clear. Now, that's not
Right.
necessarily a bad thing. The
Mhm.
reason why I think a traditional life insurance policy is better is for two reasons. A, chances are what you're paying for attached to your loan on the mortgage insurance, chances are that same dollar would just get you more coverage under a personal policy. So instead of
Right.
covering just the mortgage, you'll have the mortgage paid off and then some. The second thing is, this, it's really hard for people to qualify for mortgages these days.
Yeah.
So if you're married, when a couple has insurance and it's mortgage insurance and one of them were to pass away, it's great to say that the house is paid off, but people sometimes need cash.
Yeah.
Then the survivor would need to go to the bank to try to maybe refinance to get some money out so they can kind of take care of their daily needs to figure out what the next move is. So
Yeah.
with interest rates so low, in my mind, you're much better off taking the money using that money, sticking it in an account and carrying your mortgage payments. And that gives you the opportunity to figure out what your next move is. Because there was nothing, as nice as it would be to have your house paid off, there's nothing worse not knowing when you're going to get that next dollar from. And you have someone who's passed away, you potentially have kids, you have expenses. And as I said, it's nice to have a house that's paid off. But if you don't have cash in the bank, you're going to be turning to credit cards, high interest lines of credit, friends and family, and you don't want to be in that position. So not only is it better from a money perspective, immediate liquidity that you can decide what you do, you can do what you want with it, but dollar for dollar, you're just going to get better bang for your buck.
Yeah, and like you said, like going to the bank asking for an equity line is going to be a lot harder than just having that cash, making your payments, and it gives you, I think, a lot more flexibility in where to use your money, right? Because use the mortgage that you currently have on the property to leverage yourself, right? You're not gonna go ahead and put it all into that house. You're gonna still, whoever's the beneficiary is still gonna carry that property because they still have a family to raise in that household. And it's going to help them, if their income is, if there's a shortfall in their income, it still gives them that opportunity to carry that through, right? So huge pointer. Yeah. And so I see, for me, I think life insurance just makes a lot more sense than mortgage insurance because it's so versatile, right?
The second thing to notice is that in terms of mortgage insurance, when you sign up for the mortgage policy, they basically ask you one large medical question. And the problem is a lot of people gloss over it. I had a situation recently with a client who got mortgage insurance on a new policy and has been unable to get approved for a personal life insurance policy for medical reasons. So I asked them how they were able to go about it. And when they sent me the application, the one medical question was there, they answered it incorrectly. Now, if they would have answered it right, they would have had to go through some medical underwriting and maybe they would have been approved, maybe not. But if something were to happen to them, he thought he had mortgage insurance. But with mortgage insurance, it's only underwritten when there's a claim, meaning they only check your medical information and check the questions. If you were to pass away, they probably wouldn't have made the claim. So he thought he was covered for something that he wasn't covered for. And that's the thing. I'd say for a lot of people, when you're buying that house and the bank puts that mortgage insurance application in front of you, read the question. And if you don't have life insurance, get it. Yeah. Like the last thing, like why walk away from the bank? Why get a loan? And come on, if you're young, 20s and 30s, it's not going to be that much, even if you can get better value on a traditional policy. Still get it. Read the question, get it. And the second you have something, go to get something better, but don't wait to do it, because I've had two situations where people I've been waiting to have meetings with or had meetings with and wanted to think about it, passed away. And there's nothing worse than getting an email from a spouse asking me if we did anything. It sucks. And it's rare, you know what I mean? Like, I don't want to push people to buy things out of fear. I try to stay away from that just because I don't believe it's a good way to build a business. But these situations stick with you,
Yeah, 100%. Well, I mean, my second question was, and I think you've kind of already answered that, is like, why would somebody need life insurance? But it's pretty, like, you've kind of explained that, especially if you're buying a house, that's your largest asset that you have. If something were to happen to you, you don't want to leave that as a burden to your family that's kind of going to be left behind. And unfortunately, these are things like that we have to think about and that we don't always think about.
Totally.
But it's something that you can sleep, I think, a lot better at night knowing that your family is kind of covered, right? So I guess I'll just go right into the third question that I had for you was, there's such a wide array of life insurances, and I think it could get overwhelming for some people. But like, what kind of life insurance would you recommend, let's say, for a first-time buyer and maybe even a move-up buyer?
Get the first thing that's available to you and get the cheapest thing that's available to you, just so you're covered, and then worry about the long term from there.
Right.
Listen, I believe the sweet spot of insurance is a term 20 years. You're locked in for 20 years. 10-year policies, 5 years into it, which is nothing. It's amazing how quickly 5 years goes by. You're already thinking about like, holy crap, I need to do something in 5 years from now. Do I do something now? I'm still healthy. What are the rates going to be in 5 years? You can also do term 30. 30 years is just too long of a time, and the rates seem to get sometimes so expensive with 30-year terms that you might as well just get a permanent policy. I like the idea of 20 years because it's a good balance of time and money. That for every dollar I put out, I'm getting a pretty good death benefit for my beneficiary.
Right.
If I have a kid who's 3 or 4 years old, 20 years takes them into their early 20s. It just seems like the right period of time, and it doesn't force me to put off, looking at my insurance too long. 20 years seems like kind of like the right wheelhouse, But in general, if you don't know what to do, if you don't know whether you want a term 10, term 20, term 30, even a term 40 or permanent, what type of permanent, like that should be irrelevant. Mm-hmm. How much is your mortgage? It's $500,000. Great. I have a kid, get $750,000 of insurance or $1 million, get a 10-year term policy, put that in place, right? And then once that's in place, then compare it to doing something for 20 years, something for 30 years, or then look at a permanent insurance policy and get advice from someone that you trust who is outside of the financial world, but is successful independently financially. Get advice from a few different insurance advisors because everybody looks at these products differently. And at least you can play ball with these people, knowing that, God forbid you don't wake up the next day, you at least have something in place. And even if that means, getting that crappy mortgage insurance policy just because you want something, like do it,
Yeah.
Cancel it afterwards, just put something in place. It doesn't have to be exactly what you want. It doesn't have to be the best, right? But just have something because it's not worth the risk for $20 or $30 a month when you're in your late 20s, early 30s,
Yeah, completely. And, with the world changing so quickly nowadays and all this going on in the world, it's just like, it's one less thing that you have on your mind, right?
Yeah, totally.
One less thing that they have to worry about.
I've had two situations where clients of mine were terminally ill, and one situation I actually sold them the policy, and another situation I took over their policy from another advisor, and they would call me once every week and a half just to talk about their insurance. Like it's not going to change,
Yeah.
They're passing away, but it's amazing the sense of comfort it got for them just knowing that the money was there. Because at the end of the day, like, why do we save? Why do we invest? Why do we buy a house? We want to build something for ourselves, for our family, and for our future. And really, in my opinion, when you're buying life insurance, what you're doing is you're guaranteeing your goals. Like, yeah. I know that if I'm alive for the next 20 or 30 years, what I want, hopefully, to an extent, will come to fruition. And the way I look at my insurance portfolio is that, I'm guaranteeing that if I don't make it to that. And it's incredible to speak to people who are dealing with like life-threatening situation. They see comfort in knowing that, when that day comes, the money is there. Now, albeit it's extremely rare, I don't use these stories to sell policies, but you know what? I think everyone can relate to the fact that if they were in that position, they would have a lot of comfort in knowing that their family will be taken care of. And on the opposite end of the continuum, I've had situations where people got sick and they didn't think they got enough and they regretted it. Once again, few situations, but the reality is it wouldn't have cost them that much more to get significantly more coverage. I'll give you a quick example here. I'm going to pull up. I'm 35.
So I even knew somebody. I've heard of a family friend of ours who got diagnosed with the big C, and the insurance policy that he had actually paid him out before. Like he ended up beating it, but he still got paid out from his insurance policy because it was just the type of policy that he had.
I see.
So I've even heard of like situations like that where, he may not have been able to work, or he was not able to work rather, for an extended period of time, and his policy actually paid him out what he would have got if, or a portion of what he would have got if he would have passed.
Right.
But it helped him out so much in the interim because he was able to, still support his family. He has three kids, a wife, right? And so the kids are in university and whatnot. So that was able to kind of carry him through his hardships, and it kind of leveled things out for his family, which was a huge help. Now, I think that something like that, even just to think about, I know there's disability insurance, which is a whole different thing, but I know, having a policy that could benefit you if you did fall ill, I think is something to think about as well, because it's, like I said, we don't know what, especially with all this going on, COVID and all that, we don't know what's going to happen, right? Or we don't
Totally.
know what's going to happen to us.
Yeah. Listen, ideally, you sit down with an advisor, someone you trust, and you go through all
Yeah.
these scenarios and you protect yourself for everything, as much
Yeah.
as you can, as much as it's affordable. But in my opinion, you should sit down. You're better off sitting down with someone once you have something basic in place. Because
Yeah.
a disability policy, that's going to take time. It's based on what you do for a living. It's based on your income. Like a big insurance policy, that you want to leave your family a few $1,000,000, you may need a medical. If you have medical tests that are upcoming, an insurance company may not be willing to insure you until tests are
Yeah.
completed. That's why if you don't have something in place right away, right, get that mortgage insurance immediately.
Yeah. Start
Read that
small,
question.
start somewhere,
Start.
right?
If you're looking for a house and you're going to have a $500,000 mortgage and you're both, in your early 30s and you're both healthy, then just get a $500,000 policy, term 10 each right away. You'll spend, $15, $20 a month, right? And it's in place. And then once you have the house, then you can go sit down with someone and really look into deeper coverage from there. But I think too often, as I said in the beginning, people think about everything before they just think about the basics. Just have something in place, so it's there. And then once you have it, you can kind of go shop the market, deal with anyone you want, stop
Awesome.
delaying, because like there will be, no one wants to be that 1 in 1,000, right? That delaying the process, left them holding a bag.
Totally. Well, like I said, Adam is a wealth of knowledge, and
Thanks,
it's somebody that I definitely recommend to our clients when they are buying, and I definitely recommend Adam. And if people want to get a hold of you, how can they do that to talk about potential insurance options, life insurance options?
So I'll send you a link to my website, insuranceataglance.ca. There's a little calculator there where you can find a quick rate that I average out throughout the market. And my email, nyman.financial@gmail.com. Feel free to send me a quick note. I can reduce a rate for you quickly. There's a lot of the insurance companies are offering a lot of great platforms where you can answer a few medical questions and get coverage pretty much immediately, and medically underwritten coverage. You're going to pay a little bit more than if you're willing to kind of piss in a cup and get some blood drawn and go through the whole kit and caboodle. But listen, when you're young, it's really not that much more, and it's a small price to pay to have something in place right away. And that's going to be my advice to everyone: get something simple, keep it cheap, sleep at night, and then once you're sleeping at night, then you can talk about me or whoever else is in your network about more complicated, higher end financial products.
It's really not that bad. Like they actually, when I did mine with you, they actually came to our office, right?
Yeah,
Like
they'll come. They're self-employed. They'll go wherever you want.
Yeah, they go wherever you are, kind of thing, right? Like I don't know how things are now, but they'll come. They'd come to your home. They'd come to your office. They'd come wherever you are, right? They'll come and do what they need to do. So it's actually not that bad, and it takes maybe like 20 minutes, half hour at the most,
not even
right?
These days. Well, I think you did yours pre-COVID. These days, all the insurance companies have lowered their requirements for higher amounts. So before, if you wouldn't have needed to do a urine sample or do a blood test, now they're okay with a questionnaire and ordering a letter from your doctor to make sure there's nothing in there that they don't know about that you may have forgotten about.
Perfect.
So I would say the process is significantly easier for people like under the age of 40 up to $1 million of coverage, which, really makes, no excuse to kind of get something simple,
Yeah. Well, hey, look, I really appreciate you taking the time
Anytime,
to
man.
be here with me today and sharing all the information. Like I said, guys, if you have any questions, reach out to Adam. We'll be posting the link for his email, website, all below. And make sure you guys get something, anything to start. And we'll definitely be continuing to recommend you to our clients for years to come. So I appreciate it. And thanks for all your help.
No worries, man. Thanks for having me. I appreciate it.
Have a good day.
Take care, man.